Welcome back to Trading 360. I'm Nicole Penelides, live on the floor of the New York Stock Exchange. So glad you are with us. We have a big day, a big week here for the markets, and we have the big three. 3 stocks, 3 charts, 3 trades. Rick Ducat will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder at Theo Trade. Great to see you this morning, both of you. Don Kaufman, how are you feeling?
Good. Markets right now starting to pass through a little bit of volatility. Hey, at least some of the upward momentum, though, has died out this morning and throughout the course of last week.
All right. So that being said, we have a lot of big names this week. You have a few names that you're focusing on. First up would be Exxon Mobil. Why Exxon Mobil?
Yeah, so the Exxon Mobil, the trade I'm looking at over here is definitely wrapped a little bit around the election. I think it's, it's high time right now to take a bullish position inside of energy and or the energy complex. Exxon Mobil is just one of many other, products we could actually look at. I just think this one actually stands to gain the most. So as of right now, obviously, people are looking at the possibility, in terms of election results, the betting statistics out there, and it does actually appear that Republicans may actually win in the presidential race. However, that does not necessarily determine the House. That I would believe in the short term may actually be a little bit bearish for oil, but bullish actually, again, for the energy complex, specifically Exxon Mobil. In this particular case, I'm looking at a December 20th expiration. I'm buying the 125 calls, selling the 130 calls. Again, buying the 125, selling the 130 calls, D's 20. This one's done for an 80-cent debit, so it's an outside shot ultimately on Exxon Mobil rallying off of some of the election results.
All right, let's see what Rick Ducat has to say about Exxon Mobil's chart. Rick.
Pretty interesting chart because it kind of depends on how you look at it from the perspective of trend lines and support and resistance. So if we were to start with these lows, you can see that we have kind of a triangular shape between our 2 blue trend lines here that was broken. We had a big downside breakout, then a very sharp reversal, big upside breakout. Now we're kind of in the middle of the 2 broken trend lines here. So by that measure, they aren't a ton of help. They could still prove to be resistance and support. So they can be worth watching. But for, maybe a more accurate way to look at this is that we're mostly range bound here between our dark red and our light green lines between about 108 and 120, save for this upside breakout that we had. Now we had a bit of a drop off here. We are hanging out near the 63-day exponential moving average in orange, right around 118 or so. RSI trending downward, momentum shifting more to the bearish side. Below the 50 midline, sharper green trend line broken. Shallow sloping upward green trend line still in play, but a more bearish lean now. In terms of support and resistance, red line here, repeated ceiling, the top of our range I was mentioning, near about 120, happens to line up with our old blue trend line and very close to our 21-day EMA as well. Don, his trade would be looking for a break above these old highs. Where I circled is roughly 126 or so, so looking for a very bullish move. To the downside, green line here, frequent stopping point for price. You can see many times we stopped around there. Also a volume node, so around 114, 252 EMA just below 113.
Okay, let's see what Don has to say about that. Some of your thoughts on that chart, Don?
Yeah, so my trade is a little bit less about the technicals in this particular case and much more about the outcome ultimately of the election. One thing, people are having a tough time actually wrapping themselves around, like removing themselves from politics and wrapping themselves around trade specifically for the election. Regardless of who you want to win or who you think to win, there's actually some great trades out there. Everything from healthcare to the energy complex to even the U.S. dollar that's wide open right now. And again, they are absolutely leaning towards a Republican, president, but we actually have some turmoil that could be in the midst, dependent upon the House. So as I was saying, like Exxon Mobil specifically is right in the crosshairs of this trade. And, ironically, I could probably make an argument that they could be an upward momentum inside of Exxon Mobil, regardless of which presidential candidate gets in, so long as the House actually remains Democrat.
Now you got me thinking about the VIX and the election, and I hadn't been thinking about it because I was thinking to myself, oh, it's been sitting at 19 for so long, not much has been happening, went above 20 a bit, but the VIX could really spike next week. Is that what that's about?
So this trade is about repricing markets after the election. There's so many people that are like, oh, finally the election. In terms of traders, finally the election. It's here. The volatility will subside to some degree as we get clarity. I take a whole different approach in there. I would actually look for, there's going to be a couple of races that are, first of all, too close to call. Secondly, we're actually going to get some upsets. That's, without unequivocation, you're going to get some upsets. Things are going to get wild out there. I mean, they're going to get downright wild. And if that's not enough for you, obviously the AI trade is going to be called into question, which we're going to talk about here in a moment. But there's a lot of reasons right now to be bullish, if you will, on volatility. As such, I am actually taking a bullish trade in VIX itself. I'm going out to the DC18 expiration. So I'm going to give myself just over 40 days. I'm going to be buying the 25 calls, selling the 35 calls. So I'm going to do a full 10-point wide spread. Looking for, again, some repricing, some chaos. This trade's done for a 60-cent debit. I think it's a really reasonable price to pay for upside, potential and volatility.
Yeah, and look, I mean, the market may sell off if there's something, and then the VIX spikes. I mean, that's how it went, at least in one election that I can remember. Rick Ducat?
Yeah, so just a quick discussion about the VIX. Technical analysis on the VIX is kind of tricky because the VIX is not actually prices like shares of a stock or a futures contract or whatever. The VIX is the reflection of premiums being paid on near-term S&P 500 index options here. So it's high premiums, high risk, fear gauge, all that stuff here. So it's not exactly the same here, but we can still definitely take a look at it here. Notice the candle chart, how different it looks from our line chart here. Here you can see that the closing high was around 36. The intraday high was around 65. So like the intraday high was 40% beyond the closing. So very extreme moves in the VIX. That was August 5th when the Japanese stock market had a lot of problems. The yen was spiking. Anyway, here zoomed in more. You can see that for much of the time, low readings on the VIX. 1185 to about 1450 between our two green lines. This was kind of more sleepy periods. The VIX long-term average 1820 around that area here. So once we start getting above 20, you can see this is our red line here. That's around 21. Once we start getting in this area, that's relatively high here. So we can see that beyond this big spike to the upside, we capped out near 2380. So Don's trade would be looking for VIX to go max profit for his trade would be around here, that like high open we had on August 6th here. So, definitely kind of, around average for the VIX right at this second here.
Okay, thank you for that. Final quick thought on that one, Don.
Yeah, with a volatility shot like this, it's just that. It is a little bit of a shot. So looking for some upward momentum and volatility, just as Rick was saying a moment ago, there's nothing technically oriented about it. It just basically has to do with, hey, look, the broader marketplace, I think a lot of people believe that the volatility is going to subside, that we're actually going to get through this, it's going to be okay. I'm going to take the other side of that. I think that a lot of policies are going to be in turmoil, but I really think the defining factor over here could very well be the election, specifically in the House. We assume maybe the Senate's going to go Republican. The House is totally up for grabs. And that unto itself, it could take a couple of days or a few weeks to actually get through. And that is actually limiting factors for volatility in the near future.
Yeah, look, we live in New York City. I think a lot of people are nervous during the waiting time and you have to have patience. It could be trying. How about Nvidia? People are watching Nvidia, which hit a recent high of 144. We heard from AMD too. Some concerns about AMD. It's struggling to sort of live up to the Nvidia shadow. Some of your thoughts on where Nvidia could be headed?
So this is one where I'm going to take a very strong stance. And the strong stance is like, look, the AI trade, it might finally be fading. Now, I'm just going to throw this out here. I have taken this opportunity a couple of times before. I have actually looked for AI to fade. But at some point, look, we have all the major tech companies coming out with earnings for the most part this week, other than Nvidia. And at what point is the street done basically just paying and forking over billions every single quarter for lack of profitability on here. We need to see immediate returns from AI to keep sustaining this particular trade. Nvidia, I think, is the beneficiary, or in this case, lack thereof. I'm taking a bearish trade in Nvidia, looking for this AI trade to fade to some extent. Now, I'm going all the way out to the January 17th expiration in Nvidia. I want to buy myself plenty of time in this particular trade to play out. All I'm going to do, okay, is buy a put spread. I'm going to be buying the 125 puts, selling the 120 puts, just a $5 wide put spread. This one's done for a $1.45 debit. Now, obviously, Nvidia is going to be passing through earnings, but this is less about Nvidia's earnings. This is more about the street. Have they had enough? I mean, Supermicro put a scare into everybody today, as did AMD. Again, this is going to be a tough trade to be able to sustain for Nvidia at that growth trajectory over the next few weeks.
Yeah, Supermicro down 30% today. Rick, your thoughts on Nvidia's chart, please.
Yes, slowing, upward trajectory is definitely something I would comment on here, because we did see a little bit of bearish divergence on the RSI during the previous, highs that we were making here. Price made a new closing high. RSI did not. Mismatch between price and RSI. Also, only managed to stay in the overbought area for 1 day in both cases before kind of a reversal there. Notice as well, a longer-term downward sloping trend line here was actually what happened here. We kind of touched against that same level here. So, it kind of displays that the chart is not having the same pace of the gains that it once had here. So notice like we had, these old highs here. Our subsequent high point, only like 2.5% or so, I think, above the previous highs here before some consolidation. So now we can see that we have also broken below our green trend line on the RSI. Momentum slowing down here. We were not able to stay above our old highs there near 140.76. Now we are down a little bit on the day. We're below our blue linear regression line, our line of best fit, our idea of fair value as we head into earnings here. So, not uncommon for momentum to slow into earnings, but, to Don's point, we've had a lengthy gain here, and it seems like perhaps we could be running out of steam. Support to the downside, 21-day EMA, point of our old high close here, around 135.50 or so. Then the last set of highs below that, and then subsequent lows around 130. To the upside, old highs 144.42, plus 1 standard deviation channel, 1 standard deviation above linear regression line, 172. So a big jump beyond there. Not saying it's going to get there. That's just what the projected resistance could be.
All right. Well, we know Nvidia shareholders are keeping a keen eye on all the earnings this week and the AI trade as well. Don, final thoughts?
Yeah, well, look, there's obviously going to be quite a bit of volatility in this marketplace, but just the remainder of the week, this Thursday, Friday, everything from PCE data to the employment situation. But again, the big event comes into next week. Hopefully, we do get some results throughout the course of next week. As I said earlier, though, look for opportunities in this. Like, push the politics aside. It doesn't matter who you think's going to win. Okay, it matters what some of the policies happen to be, and how you can actually trade around those. I mean, again, the US dollar, healthcare, even big tech, these are all opportunities that are facing us just in the next week of trade.
All right. Thank you both for the big three today. Don Kaufman of Theo Trade, Rick Ducat there on the charts. A good look at Exxon, the VIX, Nvidia, and the big three today. Thank you.